A 30-year home loan, that's not a mortgage, that's a life sentence. After all, the word mortgage descends from the meaning death pledge. And with the average first home buyer now being 37 years old, it could be leaving you working for that mortgage till retirement. That's not how things have to be. You could wipe that thing out in 17 years. That's right, you could almost cut that thing in half. The solution is easier than you think. Hey, I'm Will Bell. I'm a mortgage broker down here in Melbourne. My mission is to help people make it financially. And for the last 14 years, I've helped people get into debt, but I've also helped people get out of it. This video will really help millennials out there who've bought a home in the last few years and are now living with the anxiety due to cost of living and interest rate increases. I'm going to be real for a second. Most people treat their mortgage like a set and forget. They pay the minimum, they cross their fingers, and they hope it's all good by the time that retirement comes along. But the banks love that plan because it means they collect hundreds of thousands of interest from you over the 30-year period. Want to flip that script? Here's how you do it. I recently ran a case study using ChatGPT. Here's what we looked at. A $500,000 home loan, 6% interest rate, 30-year loan term, minimum repayment on that was about $3,000 per month. I know that if you get approved for this home loan, you can easily afford to pay another $300 a month on top. But here's where it gets interesting. Over time, most people get pay rises and the cost of living goes up too. That's inflation. The average wage increase for the last 20 years is about 3% as per ABS data. So we factored this in, 3% annual growth in the total repayment to go along with inflation in wages. And guess what? You'd pay your home loan off within 17 years and not 30. Why? Because you're increasing your repayments every year as your income goes up. You don't feel it, but your home loan does. And the best part of it is you're not sacrificing your lifestyle. You're just keeping the same percentage commitment to your loan as you grow financially. It's a strategy that works with inflation and not against it. The real life problem is that people just don't implement this. I have a program called Debt Destroyer where I help you to destroy your debt like a pro. Click the link below to check it out, and if you're serious about not being a debt slave, hit the subscribe link and check out the other videos.